I'm Julia Santander. I'm Managing Director of EcoEnterprises Fund. I'm based in Bogota, Colombia. I've been with the firm for a little bit, almost 10 years now, which is sort of halfway of the fund's history. The fund has been around for 25 years almost. And I moved to Latin America for personal reasons around 10 years ago. And that's when I started to work with the fund at that time to raise third fund under management, and then took over a good portion of the portfolio management in the Andean region, investing in what we call nature-based sectors. And I'm now here at GIIN to join sort of the last bit of our capital raise towards the fourth fund. So EcoEnterprises Fund originally was born under the umbrella of the Nature Conservancy, trying to improve the cooperation of the private sector and the public sector, NGO sectors, trying to drive biodiversity conservation, nature impact, but aligning that with economic development. Because what we saw is the necessity to align sort of the famous triple bottom line, the economic improvements for vulnerable rural communities in the areas where we have biodiversity hotspots, most vulnerable, valuable natural assets that we need to preserve and conserve, but in cooperation with local stakeholders. So sort of that alignment of economic advancement and progress together with benefits on the social and the environmental level has been sort of the red line or the connecting sort of theme across all funds that we've had. So EcoEnterprise Fund has been spearheading this type of investment strategy, trying to identify private companies that not only want to grow and to become more profitable and expand in the region, but also have a commitment to achieving social results and environmental results. And of course, we started out working with startups, with the first sort of pioneers that were brave enough to give that a try, and have had the luck to continue to work with the sector as it has matured over the years. So we've grown with the impact investing space, but also have grown with the economy for sustainable business models. So now we invest in companies that are sort of not quite that early stage anymore, that are really starting to accelerate growth, but sort of a medium-sized company that is ready to really take the next steps and expand and build on their platform is really what we look to invest in, because that is sort of where we can add value as an investor, both on the financial side, but also work with the company sort of to strengthen that impact commitment and that sort of governance, the processes, but also the capacity building that they need to take that to the next level. So that's the exciting segment where we add steps and expand and build on their platform is really what we look to invest in, because that is sort of where we can add value as an investor, both on the financial side, but also work with the company sort of to strengthen that impact commitment and that sort of governance, the processes, but also the capacity building that they need to take that to the next level. So that's the exciting segment where we add.
And what's unique or special or attractive about Latin America in particular? There's a sort of seems to be a little bit of an impact investing boom in the region, but you maybe predate that. But is there something that makes Latin America hot right now?
Yeah. Well, the Latin American impact space has really had a tremendous development over the past 10 years, I would say, where really a lot of actors have pulled together, developed new products, new offerings. And I think that reflects the great potential that the region has. So for us as a biodiversity and climate-oriented investor, it's an exciting region because we have some of the most biodiverse countries in the world, in Central America, in the Andean region, Brazil, sort of around the Amazon basin. So from the ecosystem standpoint and sort of the ecosystem services that region provides on a global level, it's a crucial region for us to be present and to try to sort of expand that investment strategy that we have. But then also on the social level, it's a region where there's a lot of growth, where there's a lot of change, where we have a young society, a lot of talent coming up. Like we have a lot of human talent in the region that is eager to innovate and find new solutions, new business models to start from a local basis, but then expand regionally, expand internationally. So as an investor, it's a very exciting sort of mix of elements that comes together, both sort of on the innovative business side, but also on sort of what we can achieve on the environmental side.
And are your investors tend to be in Latin America or from outside?
We try to always attract more and more capital from the region for the region. Historically, the largest portion of our capital has come from other geographies. So we have had the support of phenomenal institutional and private investors from Europe, from Northern America since 2000. Some of them have invested in all 4 consecutive funds. But we see more and more engagement also from local family offices, local groups in Latin America interested to invest back in the region. So our LP group really is quite diversified, and we're always happy sort of to get more buy-in also from local partners, because we have very involved LPs, and that's also something that we appreciate, that we get hands-on sort of input and feedback from what type of strategies they want to roll out together with us, introductions, like an own perspective on the type of portfolios we're building. So it's exciting to see new LPs join us for a new fund that come in with a very sort of different and own perspective on the type of countries where we invest in. I think given that we started out in the impact investing space really when this was all invented, our early investors were definitely purely impact driven, or driven by exploring the opportunity to achieve both the financial return together with a robust and measurable impact return. I think over the years, just as the whole sector has developed, we see a little bit more of a differentiation in all senses. And in our portfolio, actually, in our LP group, we have investors that are impact first, but we also have investors that put an emphasis on the financial return, but still require the rigor on the impact side. So if you would ask me, I would say we are a very market-oriented, impact-first investor, but it's always an impossible formula to find, because I think we're not necessarily trying to compromise on any of the both sort of sides of the equation. We really work with companies to make sure that they are profitable, that they return a profit to our investors, but we're really also there to be hands-on engaged on the ground to make sure that they have a very robust approach to their sustainability strategy, that we can drive ambition on the environmental outcomes and the social outcomes. So for us, it's really not an either-or question. We really try to achieve both. And within our investor group, we have also a spectrum. We have, over 20 years, developed a set of instruments, including sort of the first metrics monitoring tool 20 years ago that has evolved over the years. So we have a pretty rigorous monitoring of just above sort of 40 different impact metrics that include environmental metrics, social metrics, and financial metrics that we consolidate across the portfolio, and that we use also to track progress, to define action plans for our companies where we need to dive deeper. We are starting to work on carbon information for our whole portfolio. Our goal for our next fund is to have emission reduction plans for all portfolio companies, which is especially relevant because the companies we work with are usually not large enough to be legally obligated to do these types of analysis and strategic actions. So for us, we're really catalyzing a trend. And then, of course, we'll report that back to our investors that are more and more interested in carbon. But our investors usually look for a broader set of environmental sort of results than just the carbon metric. So being a biodiversity-oriented fund as well, of course, it's always a broader spectrum than just the emission metrics, but it's an important one. I don't think capital raising ever gets any easier. I think that's also learning over time. It just takes time. It takes time as the impact investment sector evolves. There are so many different products and offering strategies and approaches on the market, so it takes time to explain our approach and find the best match. It's also an evolution within the institutional investors that sort of adjust their strategies and need to find the best match. But even with investors that have worked for us for 20 years, the processes just take almost as long as the first time around, which I think is also a good sign. We are a mature sort of investment space. We apply the same rigor to the impact investments that we make. That's true for our investors as well. They also take the time to really evaluate what we do again and again. And I think it's just what it is. It doesn't keep us up at night that it takes long, but yeah, it doesn't get faster. I think that has definitely been an interesting shift over the past years. So when EcoEnterprises Fund started 20 years ago, I mean, impact was to be seen. So there was not a very dedicated theme that investors asked for. It was very open. Then I think when I joined EcoEnterprises Fund 10 years ago, there was a key focus on social impact across the board, and the environmental filter that we applied sort of as a first filter to all the pipeline opportunities we were reviewing was still quite exotic in comparison to the broader field. And I think that has taken a complete turn over the past 10 years, with now climate sort of dominating the conversation. And I think now, over the past years, we see sort of that new shift that climate is again being considered in a little bit of a broader sense, with intersections to other impact themes. So for us, it's climate, biodiversity must go together. There is no climate solution if we lose all biodiversity. There's no biodiversity if we don't find a climate solution. But for us, it's also the underlying sort of social equity. You know, we need a just transition. So I think that has definitely changed, that the environmental conversation has become much broader, that there's much more interest of investors coming in, and that we're now starting sort of to again dissect that environmental question into like what other elements do we need to take into consideration beyond carbon and beyond climate. So for us, the intersection of climate and gender is a particularly interesting one. First and foremost because we are a female fund, we are female founded and managed fund. We have a primarily female team, and that over the years has always meant that we're intrinsically sort of motivated to look for female founders, for female entrepreneurs, for female leadership figures within the portfolio companies where we work. And sort of we've always applied a gender lens to our portfolios over the year without being very outspoken about it. But over the past years, the gender has become more of a consideration that also is relevant for our LPs and for our investors. We have applied a continuously more rigorous gender lens to all the investments that we make. We work hands in hand with our companies to understand the gender lens of their operations and of their work in the region. And it's been a very fruitful conversation because given that we work in rural-based sectors, in agriculture, in ecotourism, in remote regions in Latin America, a lot of times the women in those communities where those companies operate are really sort of the social glue that hold communities together. A lot of times the ones that bring in a good portion of the household income, even though maybe in informal employment, or that take an important role in, for example, managing the family farms. So what we are really trying to do is to raise that awareness and to raise that sensitivity on our portfolio level of the companies, that they need to take responsibility and be proactive about how they consider gender along their supply chains, and really trigger a change in a positive way of acknowledging differences, of making sure that they have the processes in place to hire equally, to make sure that they know who the female and the male suppliers are, where their cash is going to, and how sort of gender is considered in their communities. And it's a very exciting conversation once we get companies on board, and we have seen that there has been a tremendous interest also on the company level, especially in companies that don't have a high percentage of female employees or female ownership, to improve that. Because once they become aware of that shortcoming and they are aware that they maybe lack female participation on a leadership level, that really sort of sets off a thought process that we have found very interesting. It's a very exciting conversation once we get companies on board, and we have seen that there has been a tremendous interest also on the company level, especially in companies that don't have a high percentage of female employees or female ownership, to improve that. Because once they become aware of that shortcoming and they are aware that they maybe lack female participation on a leadership level, that really sort of sets off a thought process that we have found very interesting.
What's most exciting, either that something you've done in the fourth fund, you've already started investing from it, or
we're close to our initial closing of Fund 4.
What are you most excited about doing with the new
So, first of all, it's very emotional and it's exciting to be a couple of weeks away from the initial closing of a Fund 4. I think in the impact space, it's great to see that we have grown over the past 20, 25 years, and that our impact strategy is sort of more meaningful than ever, with more attention being paid to biodiversity and climate and rural communities overall. And I think what's really exciting is that we see that we have a tremendous pipeline of investment opportunities in Latin America, with companies that are really ready to scale up, to really professionalize, be more ambitious, both about sort of their operational and commercial goals, but also of becoming real like leaders in a change process in the region. So like medium-sized companies that really feel empowered to drive a change in their industry segments. And I think as a really hands-on investor who works very closely with the portfolio companies, that for me is very gratifying to see that we can set off and catalyze these type of processes where medium-sized companies that are not sort of the industry leaders necessarily in their countries, but sort of runners up, are suddenly becoming driving meaningful change in the industries and leading conversation with industry peers. We want to find the next generation of companies that become the alpha in impact in their industry segments and in their countries. Yeah, that's a beautiful one.